Since my last update, I had my largest buying period in this channel's short history. Additionally, I had my greatest month of dividend income thus far. Throughout this video, I'll be giving you a complete update on my dividend stock portfolio and discussing why I'll be buying stocks no matter who's president. My name is Zach, and you should leave a like and subscribe to the channel if you enjoy the video. The purpose of me doing these monthly updates is to show the progression of my portfolio over time. These updates not only help hold myself accountable, but I hope can provide valuable insight for others as well. With that said, let's dive into the numbers. This table shows that since May, I've gone from $32,939 to $39,291 invested by the end of October. You can see that I saw a huge jump over the last month, fueled by many of the purchases that I will discuss later in the video. During the same time frame, we can see that my dividend yield on cost increased from 4.58% to 5.57%, and my compounded dividend yield increased from 4.61% to 5.69%. Again, this last month saw another large increase due to a number of my investments being high-yield purchases. The differential between the dividend yield and compounded dividend yield is now 0.12%. This stat will continue to increase significantly over time and acts as a measurement of the snowball effect from reinvesting dividends. In this chart, you can see how the value of my dividend portfolio has changed over time. My current value is $41,626. October and September both had periods of large declines, which I've been using as buying opportunities. In this next chart, you can see my dividend income to date. In September, I received $231.35 in dividends. This was my highest month of dividends ever, but it is just the beginning in the grand scheme of things. In October, I earned $125 in dividends, and this graph shows that my income is steadily trending upward. This is due to consistently investing more money, reinvesting dividends, and the dividend increases of my holdings. Here you can see my cost allocation by sector. Energy, communication services, and real estate are my three largest sectors at 23.8%, 19.1%, and 13.3% respectively. My lowest sectors are utilities at 0.9% and technology at 4.32%. I'm well aware that my portfolio is heavily skewed towards energy at the moment. This is because I think these stocks are at a great value, which I've discussed heavily in some of my recent videos. I want to stress that this is not my long-term plan. Once the energy industry recovers over the next few months to year, I will likely not add to my energy position for a long time. In fact, I would not be surprised if in a year energy falls significantly in my portfolio. Right now, my plan is to reinvest these dividends while the prices are low, and as soon as they recover, start to use the dividends to fuel some of my other investments. To better understand how my portfolio has changed, let's take a look at all my recent transactions. In my last update, I discussed how I was going to concentrate my portfolio around quality and businesses I have a good understanding of. Shortly after that video, I trimmed my portfolio more, selling out of AOS, LEG, UBSI, and NFG. This was not necessarily a condemnation on these companies, rather that I had other investments that I thought the money could be better allocated towards. This brought my dividend stock portfolio down to 32 total stocks and provided $2,614 extra dollars to invest. After that move, I invested $6,563 in total over the next month. This was my largest month of buying since I started the channel. I purchased 7 shares of Disney at an average price of $122.26. This brings my overall position to 19.09 shares at a cost per share of $111.09. Disney currently has their dividends suspended, but I believe they will bring it back. Even if they don't, I still think it's a solid investment. I've made multiple videos analyzing the company, and I have them linked in the description below. I bought 3 shares of Apple at an average price of $113.03, giving a starting yield of 0.72%. This brings my overall position to 7 shares at a cost per share of $115.42 and a dividend yield on cost of 0.71%. I want to build Apple as a large position in my portfolio and explain why in my full stock review on the company. I bought 5 shares of Johnson & Johnson at an average price of $139.56 and a starting yield of 2.89%, bringing my overall position to 6.01 shares at a cost per share of $135.77 and a compounded dividend yield of 2.98%. J&J is a position I'm looking to build up significantly and will likely make a video on the company very soon. I purchased 35 shares of Enterprise Product Partners at an average price of $15.97 and a starting yield of 11.14%, bringing my overall position to 73.59 shares at a cost per share of $19.89 and a compounded yield of 9.14%. EPD is an oil and natural gas company that I was looking to lower my cost per share on. I think they have a reliable dividend and we're incredibly undervalued. Be sure to let me know in the comments if you'd like to hear more about EPD. I bought 59 shares of AT&T at an average price of $27.32 and a starting yield of 7.61%, bringing my overall position to 186.14 shares at a cost per share of $28.52 and a compounded yield of 7.41%. If you followed the channel, then you know I've made multiple videos on the company and think it's a great stock to feature in your dividend stock portfolio. I bought 3 shares of Chevron at an average price of $71.03 and a starting yield of 7.26%, bringing my overall position to 18.45 shares at a cost per share of $94.88 and a compounded yield of 5.57%. I purchased 58 shares of ExxonMobil at an average price of $33.25 and a starting yield of 10.46%, bringing my overall position to 139.84 shares at a cost per share of $40.91 and a compounded yield of 8.62%. I've been able to bring my price down significantly on Exxon, and this past week they announced that they will hold the dividend. I've made multiple videos about ExxonMobil which provide insight as to why I'm investing in it, and oil and gas more generally. Finally, I bought 5 shares of Federal Realty Investment Trust at an average price of $71.49 and a starting yield of 5.93%, bringing my overall position to 41.95 shares at a cost per share of $77.20 and a compounded yield of 5.56%. I've made videos discussing the company in detail. So that's all my recent buys, but now it's time to discuss what's on everyone's mind: the 2020 election. On election night, it seemed like President Trump was leading and on track for re-election. But as more mail-in ballots came in, the tides quickly changed towards Biden. As of the making of this video, the final results are still unknown, lawsuits have already been filed, and recounts have been requested. It's likely this election won't have a sure victor for weeks, and it could end up being settled in the courts. With all this uncertainty and the possibility of a new administration, many people are concerned about the state of the country and their investments. I have my own political preference for who I want to win, but for the purpose of the video, let's leave that aside. Instead, let's focus on this from the perspective of an investor. Over the history of the United States, the stock market has continued to grow regardless of the administration's political party. As you can see in this chart, the S&P 500 has seen growth under all different kinds of presidents in terms of both party and policies. The reasoning of this is simple. Politics often has little influence on business operations and everyday life. Apple will keep selling phones, AT&T will keep providing cellular plans, Disney will keep producing content, and so on. Life continues to go on. That is why I will continue to purchase stocks regardless of who is in office. I have a strong belief in the American economy long term. At times like this, it's important to hear from those who have come before us. In this clip, Warren Buffett discusses politics and its influence on investing.
There's one question that came in from, this is F20, Ahmad Abu Rashed, who said, would a strong and sustained shift to the left in fiscal and economic policy rip away at American business tailwinds moving forward?
Yeah, well, my dad thought, communism was coming in the 30s. And, he was very anti-Roosevelt. All my life I've been hearing half the country say that if the person favored by the other half wins, things are going to go to hell. And so I pointed out in my discussion, I've lived under 15 presidents. 14 of them I've invested under. I didn't invest under Hoover. I was a little young then. But 7 were Republicans, 7 were Democrats. I mean, after this last election in 2016, most of my friends were for Hillary, and they thought, sell stocks, dig a cave, do whatever it might be. And I told them they're crazy. You do not want to have a political view in investing. And most people put it through a political prism. They just can't keep their politics out of it. They can keep their religion out of it, but politics, they just have to look through those glasses. And if you'd done that, if you'd been a staunch Republican or a staunch Democrat through these 77 years, you'd have missed out on a lot of the party.
For this reason exactly, I will continue to invest no matter who is president. I wish success for all those watching this video, and I hope we can continue to build this community of investors going forward. Thank you for watching Dividend Data. I'd greatly appreciate it if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. You can support the channel on Patreon and be a part of making these videos happen. The link is in the description. Please leave a comment below, and thank you for watching.